Okay, GM, welcome back to episode 2 of Friday Sharpeners. Last week we spoke a bit about, the developments happening in AI and how that's apparently sucking down all types of different businesses, including all the software compounders, etc. Um, you know, we vacillate between we're so over and we are so back. And I think yesterday was another we're so over move. So, impending AI collapse for anything capital light. We'll see how we go next week. This week, we're going to talk a little bit about my very small forays into Japan and why this has been a strange and weird experience and really hasn't it's not really geography that fits someone with my skill set and my outlook on how an economy should run at the macro level and how a how a business should be run at the micro level. There's been lots of good there's been lots of really good media come out of the space. So there's been like some really good newsletters that have been getting written by locals and by people who have worked in East Asia, and uh, there's been some on the ground sort of reporting and research which has come down, which has been good. So it's like kind of like a it's like a in it's like an infinite source of like amusement, uh, and like there's like endless number of how would you describe it? Like an endless number of like novel things that happen there, which are like pretty fun to to read about. But uh, I haven't made any money there, or put a whole lot of money to work, even though some of the things do seem to get pretty attractively priced every now and then. I forgot last week to like shamelessly plug my blog, which was the buyback capital marketing department got very upset with me. So this week on the blog, we covered Auto Trader and some of the developments happening both in North America and in Europe with respect to used car sale consolidation and what's happening. So there was a research piece dropped on that. I also did an ad hoc update on happenings with Fair Isaac Corporation, and some of the announcements that Pulte and his counterpart at the Housing and Development Authority, or whatever it is, HUD, secretary announced yesterday with respect to Vantage Scores rollout. So I'll put links to those in the show notes, and if you want to go over there and have a look at that. Naturally, that is a paid product aimed at a professional investing audience. So if you don't care for that, continue listening along. Anywho, on to Japan. So I've got the title here: a good market for special sit investors, probably a pretty crummy market for long-term orientated value investors. Um, like where to begin? Uh, you know, having spent quite a bit of time in Asia myself, um, having followed quite a few companies there on occasion, owning companies that are listed and operate in Asia. Um, it's such a different culture to the Western, to a Western European, North American culture. It's almost completely alien in many respects, and there's all kinds of reasons for that. There's a lot of history. Their history has been very, very different than the Western experience, and certainly, the underpinnings of capitalism in the West are, remarkably different than how capitalism is thought of and works in the East. Um, they're completely different. Um, and so, it's like kind of it's really to a more novice or fresher onlooker, like the perpetual meme is that so many of these things look cheap and inexpensive, and then you kind of like look another level deeper, and there's like all this really crazy stuff that you can't possibly anticipate that's happening right beneath the surface. And the problem with that is, there's like a reason why some of these things are cheap, and in a quote unquote typical capital market, you know, capital finds a way. So when things are inefficiently priced, incorrectly priced, a company is not achieving the returns that it should achieve. The overriding, imperative of capital is to correct a lot of those things. And so the capital markets and firms themselves kind of, you know, either go out of business or they get better. And then in places like Japan, in China, there could be all kinds of like strange, oddball societal reasons why none of these things get fixed. And then in less, you could say it like conforming or less, Asian countries that have less of a societal straitjacket. There can quite often be like a lot of corruption, and their legal systems are personal, patrimonial. There's uh, familial. There's all kinds of informal things that come to play on how many of these decisions get made. And these things like kind of corrupting for returns. Anywho, Japan in general has like this very rich, incredibly rich culture and interesting history. And for many centuries it was like a warrior dominated, strictly hierarchical feudal civilization, um, basically with a nominal head of state who's kind of like a religious figure, and then a warrior upper class. And being a merchant, someone who made money by buying and selling things, was it's kind of like a very low, it's like a pretty low calling and a low social status. People who made their money from the land were higher status, and people who made their money from being warriors were, uh, you know, one of the higher statuses, along with people of religious significance, which is not that different from Europe. Europe was probably just a couple hundred years ahead of the curve in terms of transitioning from feudalism to like a early modern state. Um, Japan made this transition later, as Europe became much more technologically advanced. They aggressively and militarily pressed their own, economic interests in the East, and then in response to that, places like Japan modernized like a like a half a century or something like that. Did hundreds of years of catching up in decades. Obviously, before the Second World War, the modernizing thing kind of tilted towards militarism and imperialism. And then after the Second World War, it was kind of like like a democracy installed, which was kind of, US vassal satellite um, state. And that relationship has kind of persisted for many decades, and we're kind of up to the modern point. But it's very interesting in that many of the corporate elites that existed before the Second World War have persisted, and somewhere like Japan has some of the oldest run companies on the planet. So I don't know if this is exactly true, but there's this trope that there's like an 800-year-old hotel that's been run by the same family somewhere in Japan, for like eight centuries, which is completely remarkable. The The names of many of the very big firms, they were, they're the same names of the big feudal lords. The successful feudal lords, during the modernizing period, they successfully transitioned to business. Many of these like old social and cultural things, persist until this day. There's a lot of reverence for elders. There's like, consensus, um, decisions by consensus. There's a big relationship. There's a big emphasis placed on relationships, and doing things in a formalized, maybe even ritualized manner. And this is not a society culture that likes rocking the boat or is necessarily that receptive to, outside influences or, quote unquote, like young people shaking up the status quo. It's not really how um, the society functions. So, like I said before, Mitsubishi, names like that, these are companies that found their founding moment in a like successful aristocrat moving to business, and they even still their corporate logos are like quite similar to what their old banners used to be. The banners they would take into battle, which is interesting. Anyways, a lot of that stuff kind of like coalesced into this thing called the Zaibatsu, um, which were like consolidated, state capitalist, a corporatist economic elite that was in sort of like a partnership with the militarists before the Second World War. Um, and these some of these ideas persist until today. Amazingly, somewhere like Japan, the same concerns that we have today with China overtaking the United States, you know, those those tropes were used to be rolled out in the 80s and the 90s in terms of Japan overtaking America. Um, and so it's an absolutely, I still believe it's like the second or third largest economy today. I think they have the second largest navy on the planet. Um, 90, 100 million people or so, an enormous civilization, but with a terrible demographic situation, which is kind of like lopsides the culture, which is exactly what we're going to in the West now. The baby boomers did not have enough kids, and there are many more old people in society than younger people. So they have, even persisting until today, they have in Asia generally, they have a weird relationship with capital. Western countries, especially the United States, they devolve from a puritanical understanding of capital, which is, kind of like capitalism is means in and of itself. So, you know, getting the highest return on capital, capital being the dominant partner in economic decisions is like it's an imperative. It's the way the legal system is set up. Um, it's how the economy operates. You know, labor is not calling the shots for the most part. The government is not calling all the shots in the economy. Capital driven by wanting to get a return for the most part drives the economy. In Asia, capital is they do not believe that. In places like China, this is incredibly um, they're explicit about this. Capital is a tool um, that society uses to achieve its ends. And so they do not believe in the Adam Smith, the invisible hand. They don't think that the marketplace should drive decision making or determine where capital should get allocated towards. In places like China, there are large state-owned banks, there are SOEs, um, funding lines, the currency, etc., largely controlled by the government, and capital is directed to places where the society wants to achieve an end. So like and to the extent that independent capital responding to market forces can be a funding mechanism for that, that's kind of like the extent to which some of these cultures will tolerate independent capital. Japan's um, a little bit similar in this respect. There are long-standing industrial giants that persist until this day. It's consolidated banking and insurance sectors, which are also long-standing. Um, and the relationship between capital and labor is, strange and difficult to properly get a hold on. So, probably up until quite recently, it was very common for somebody to have their whole career at one company. You would kind of finish your education, and then you would sort of like head into a intern graduate position at a big corporate, and you would kind of make your way up the ranks as best you could. These things, reflect the society. They're hierarchical, um, and people are kind of devoted to the company, and in turn, companies, big firms, recognized some kind of social responsibility to these people, which includes like not firing them. So you have, along with strange things like, working at one company your whole life, which is completely, that's really a thing of the past in the West. That's something that like my grandparents would have experienced, or their grandparents would have experienced. Sorry, my grandparents or their parents would have experienced. Um, it's something that still goes along today. You have this kind of, so you have like that's a trope. Um, People are not fired; they're just kind of like shunted off to the side if they're not productive or they haven't been successful in in the roles that they've been given. You have this strange dynamic where if you work in like a big corporate in the West and you're given a corner office because you're a hotshot executive and you don't want to be seen with the hoi polloi, you want to be removed and you want to have a nice view, etc. So the corner office is like a prestige status symbol in a big corporate in the West. In the East, a corner office is like a death sentence. So you get a corner office to kind of be removed from everyone else, and you kind of stand over there, and then the consensus decision making is made over here, um, which I also thought was like pretty pretty funny. Um, like that's like a strange difference. You have this thing where because people really aren't they really don't get fired, and you spend your whole career at a place. Um, you have like very strange and hierarchical progression through a business. So in like the rough and tumble capitalism of North America and elsewhere, I would say elsewhere in the West, like one of the mechanisms that is used in a big corporate is like usually young people kind of get like thrown into like three different buckets. So you like come into your graduate position, and you're reporting to someone, they're reporting to someone who's reporting to someone, and blah blah blah, up and up the list until the CEO, depending on how big the company is. And like pretty quickly the person you're reporting to, the other people you are working with, and people up the chain are got to the extent that they know about you, are going to probably identify you as like someone who's like a grunt employee. So these are like people who um they're kind of just doing enough to get by. They might not be interested in the job, it's just what they could get. They're not that interested in working that hard in the first place, whatever. But they kind of like produce uh a like a repeatable amount of productivity that is, you know, predictable. And so you can kind of like model that out. So the people who aren't like working that hard and don't seem that ambitious, they kind of, get left to fend for themselves. And there's like two other categories of people, and there's like the middle manager types, and these are people who work like too hard at their job. Like they're very committed to their job, and they're providing a lot more value than what they are negotiating from the company. So this is kind of like one of the first mistakes that young people make is that they just try to work too hard, um, and it like annoys people. It annoys their colleagues, and it is taken advantage of by the people who employ them. And so these are these people who get like they get moved up into these like middle management roles, which have no power, but they kind of exist as like a buffer between them and upper management. They're kind of used as like helpful idiots, if you will. And then there are people. There's like a small group of people who are like maybe they're not working that hard, but they're like quite ambitious and they're looking for opportunities to like move up. So they're looking for like they're not trying to move up just because they can put in a lot of work. They're trying to find like high leverage, risks, you know, quote unquote risks to take to like kind of move up. Um, and these three progressions are kind of like they get sorted out very quickly. And it's not uncommon to see people who are like in their late 20s, mid 30s, whatever. They get like identified as like a wunderkinder or a hotshot or whatever. And some of these people get tracked up very quickly. Um, um, and that's a thing that happens quite often. It's not a lot of people, but it is some. And like in these Japanese companies, that does not happen. There's like a stated progression up and up, and you kind of do your best at each stage. But you don't see these things where like a 35-year-old guy is the CEO. It's often the bigger the company, the older they are, right? They get to the CEO position in their late 50s, 60s, or something like that. And by this point, they're not really trying to direct the company in like a dynamic direction or anything like that. It's kind of like this, progressively like, benign oligarchy type, boomer oligarchy type thing. Um, and it's just very weird. And there are all these like perverse economic incentives for the people who are like running, running these companies, which will come which we'll come back to. Um, so yeah, the role of capital is just weird, and there are labor constraints that like have to be respected, and to some extent that is like a curbing mechanism on returns. Like come back to how this is like manifests itself. Um, so yeah, like I was listening to this great podcast by Made in Japan, and I'll put the link in in the show notes section. And it's a great interview between Made in Japan and a gentleman who worked for a long time in investment banking in Hong Kong and in Japan itself. And he was sort of like illustrating a lot of these micro points within companies and how they're governed. That there's things like if you make a certain amount of money, you're going to be that remuneration number gets released to the public, and so a lot of these like high level executives at very large companies are making hilariously small amounts of money because they don't want their compensation to be widely known. And it's not acceptable in Japan for like a CEO of a large company or the CEO of any company to make like a gigantic amount of money. It's like quite communist in that respect. Like in the West, people do not blink at like a large, important CEO making many hundreds of millions of dollars over their career. There are professional CEOs of the large tech companies that are going to be worth billions by the time they finish. I think not Tim Apple, Tim Cook, he's just retired, and he'll be in the executive chairman position at Apple in September. And I think he's worth over $1 billion. Not the same, over in Japan. And there's no real, there's historically been not a lot of alignment in executive compensation. So again, they're not getting paid very much, and the amount that they do get paid, it's just all cash comp, and the execs don't really own a lot of equity, which sort of brings us onto this next point of governance broadly. But um, like multiple waves of kind of people trying to economically rationalize um, Japan. Usually, this is started by some kind of insider, maybe not insider, sorry, a local domestic Japanese who has, ideas of modernizing and making capital markets and the domestic firms more efficient, to sort of like remedy some of the issues they've been running into, like, low, you know, historically low inflation. They have these like incredibly low interest rates. The growth rates are anemic. Part of that is demographic, but there's obviously a lot of low-hanging fruit that they could be harvesting in terms of making their large domestic firms more efficient. There are these things like cross holdings. So these large historic legacy Japanese firms quite often hold equity in their suppliers. So you're like Toyota and you own 25% of the equity in a domestic, like, seat manufacturer. And that's had like a kind of chilling effect throughout the economy in terms of, some of these smaller companies, first of all, not being able to reform in the first place because these large holders are status quo. They're not interested in things changing. And there's certainly, you have like all these perverse incentives where, you might have like a mid-level employee at Toyota who isn't making CEO money, but he's like responsible for the relationship between Toyota and their supplier. And, this CEO, like the CEO of that company trying to make a whole bunch of money through stock comp or even just increase cash bonuses, that kind of thing. It's not really good. That message isn't going to be communicated in a very positive manner, at Toyota to kind of like get the votes necessary. So you also have like a very compliant, along with that kind of dynamic, there's also just like a compliant, what's called an allegiant shareholder culture, where a lot of historic, long-standing holders, at big insurance companies, suppliers, these cross holdings, local investment firms, they all, yeah, basically, will support management off the bat. Um, and, so it just maintains the status quo for like very long time. And the has it not only does it have a chilling effect on governance, but that's also how you see these balance sheets are like hilarious. You know, like just take America because it's the most obvious opposite example. But it's a pretty American thing to have your balance sheet levered to EBITDA, and 6, 7 times, maybe even more, depending on how aggressive of a strategy you're pursuing. Uh, and it's not that uncommon, for really good companies that are very capital efficient to run like negative equity, right? So they like wipe out all the book value and they run like a levered recapitalization strategy over many, many years, if not decades. This is not uncommon. But like if you go and run like the same playbook, like you go and pull up even the balance sheets of like ostensibly very good companies, which have obviously good economics, not that many employees, um, recurring revenues, royalty like revenue, blah, blah, blah. Until like quite recently, there was, you'd, you'd have some hilariously large cash balance. There would be, equity, be like an investment portfolio for a company that's like completely unrelated. Sometimes there would be like undisclosed real estate or poorly disclosed real estate, like on the balance sheet, a number of these. So even as early as like, even going back to like the, pandemic period, there are multiple Japanese companies that had ostensibly negative enterprise value because they were carrying the cost of their owned real estate for the price they bought it in like 1974. Or in some cases, they didn't even have to disclose it. They didn't even have to disclose that they owned real estate or what its value was. So this is like a very this is no bueno. This is not gap compliant. You can't, it'd be like almost a joke in the West that you were going to obscure assets on your balance sheet to your shareholders. This has not been an uncommon thing in Japan and for decades. And for decades. Um, so you've had kind of like multiple waves of people trying to rationalize this, usually on the back of like a domestic entrepreneur trying to run some kind of activist fund. You'd have a whole bunch of, foreign private equity and activist funds sort of show up in more recent times. Some of these have been Americans, Singaporeans and so on have set up and tried to do this, but it's been like very incremental for some of the reasons that I've mentioned in terms of the way these companies are run, how long it's kind of taken to unwind some of this stuff. And you've had like fits and starts and big wins and big failures uh, over the decades. And so, you kind of get like, it's kind of like a bit of a trope, but it's like this same theme sort of pops up every now and then that, like, oh, things are going to get, like this the idea that there's this large scale corporate makeover happening in Japan sort of pops up, but it's kind of just been happening every year at a pretty consistent and slow pace. And then every now and then you get like kind of like a big win where outside private equity or domestic activist or a combination of the two kind of get one of these things over the board. Like one of the ones that I came across last year was Sapporo Holdings. So this was like it's like an interesting activist slash private equity deal that popped up. But for those that don't know, Sapporo Holdings it has like three different businesses. This is also another funny thing about Japanese companies is just first of all like how strange some of the businesses can be, and then secondly like these conglomerate structures which make no sense. But Sapporo is actually a like anyone can recognize that kind of business. They're a brewery for the most part. Um, I think the Sapporo Brewery business is a couple of 100 years old, 150 years old, something like that. They're the third or fourth largest domestic brewer, and they have a big international presence. So Sapporo beer is um, well known in Australia. I've seen it in other countries. Um, Good beer. Enjoy drinking it. So they have this traditional, like, they've got the traditional brewery business, and then they've got basically, so they call that beverages, and there are some other beverages included in the brewery. And then there's also this basically like a snack business, like, um, packet chips and like small confectionery items and stuff like that. So that's like the second, croissant. They're making croissant in Japan. Um, so that's like the second part of their business. It's kind of like, okay, they're making beer, they sell chips, that kind of thing. Okay, that kind of makes sense. If you go into any liquor store, basically the two things they sell is alcohol and snacks. So it's like, okay, those two are kind of related. That makes sense. And then they've got a real estate holding and a real estate management arm, which makes no sense. Like, what does a brewery have to do with managing like grade A commercial and industrial space? I don't know. The history behind the property part was I think they in the sort of hustle and bustle of the 1980s and the speculative real estate stock market bubble that occurred, they ended up owning quite a bit of real estate for one reason or another. On the back of that, they obviously had to manage their own real estate. So they decided to in-house that, and then that function that they built in-house, they could then, extend that as a third-party service, property management service to other businesses. Property management's a pretty good business. There's no doubt about that. Owning real estate is not a great business. It's typically a low returning business unless you've got some very creative tax efficiencies and operational efficiencies that are created elsewhere. Those things were not true. For many years, the I'll be butchering this, but I think either the real estate was only carried on the balance sheet at acquisition value, and I think even that might have been like depreciated away or something. Someone will correct me on that. Or they were not even disclosing the value. But they were not disclosing that they owned real estate on their balance sheet, which is weird. I mean, kind of it almost sounds criminal. But they weren't disclosing it. And so like before COVID, they activists got involved, and I think might be KKR, and eventually they kind of forced the sale of the real estate, which has gone through quite recently. So when the value of the real estate was made, like when it was eventually disclosed, there was a whole bunch of activism and governance and board challenges, etc., to try and get this done. But the company had essentially been trading at negative equity value for like many, many, many years, if you included the value of this real estate. Even up until today, I mean, like if like even they're getting the real estate out and selling it. And I think they're getting out of the property management business, which is just weird, right? Like doing three pretty unrelated things, and focusing on something that you're good at and that has good economics. That's like a Jack Welch invention in US capital markets, as early as the 1980s and 70s. So, these guys are decades behind the game. But anyways, I think the real estate's kind of been sold off. And even today, when you take out the value of the real estate, the like the snack and brewery business is like, um, the equity stub that's left is very, very, very small on a sales basis. And the brewery business, breweries, even third or fourth run breweries are like pretty good businesses. Like dominant breweries are typically great businesses, and they can have incredibly high margins, especially when there's like a really dominant domestic beer brand that has pricing power. Like sometimes those can have like 40% EBITDA margins, incredible returns on equity. The margins are slim as they're low single digit return on equity once you take out the value of the real estate, etc. So it's like all kinds of, like obviously that's an opportunity for the people who got in first and did the activism. How you would even know um, to look at a company that's not disclosing, that's also strange to me. Um, and so, you obviously need relationships and know-how in terms of uh, board governance to like go and pursue some of these things. At the same time, you have to kind of remember that like for 40 years they had this real estate, and really it wasn't conceived of as part of the value of the company. So that's like a strange example of these like governance and asset deals. um and like the many, many, many years it can come to like take come to realize the value of some of these things. I mentioned before there's like a whole bunch of businesses in Japan that not only do they not exist anywhere else, but sometimes they've failed everywhere else, but they're successful in Japan, which is like another perplexing thing for me, who uses like historical and current models of successful businesses to try and like see what might work today. You need like some kind of reference to know what's going to work, and you're confronted by like some very weird uh you know business models that are like quite successful there, and it's really perplexing. One of them, I've written about the Japanese cloud accounting names, specifically Money Forward, before. And Money Forward started life as this personal finance app, right? So you like put all your personal spending and your credit card spending and blah 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 blah, your savings account and all this information into this app, and it'll help you budget and once it grabs all this personal information off you, it can then start marketing financial services to you off the bat. And there was a product in North America called Mint, I'm pretty sure, and it was bought by I'm almost certain it was bought by Intuit. And yeah, this thing like crashed and burned, and they a few years after Intuit bought it, it was shut down, and I think it was shut down during the pandemic. And there's probably all sorts of reasons for that. These small personal apps are kind of, yeah, just don't seem to either get to the scale or have a workable um, business model in that the functionality of the app is quite good, but being able to monetize it is poor. Like these things should really be like a function of, just like how Apple has, their own apps, like they have the music store, they've got Apple Books, stuff like that. Like a My Fitness Pal, that should be like an app that Apple buys and just has as part of their iPhone offering. Trying to make it work is it seems impossible, but that's not true in Japan. So Money Forward started life as this product called I think Money ME, or that's the anglicized pronunciation of the app. And this was like an app created by the founder and some of the early employees, and it had like a Kim Kardashian moment in Japan where it got like the app got mentioned on a prominent national television. I think it was news or like a current affairs type thing, and it got like millions of users off that back of like free advertising basically. And it still persists to be a profitable business segment today. Basically, people uploading their own personal financial information to like rationalize it, on this app or desktop product, and then Money Forward markets, credit cards and savings accounts and insurance products that like fit your personalized profile back to you. Again, complete failure in the West, hasn't worked anywhere. It did work for the founders of Mint in that they sold it, but like Intuit had to basically shutter it and take some of the functionality and just roll it in with their existing platform. So there's stuff like that, like um, a good investing friend of mine, put me onto the Hello Kitty IP holder. So it's a company that owns the intellectual property and licensing rights for Hello Kitty, and that's again, like that's a very popular thing both at home there and abroad. I've heard of Hello Kitty before, and they've been wildly successful in licensing that product out into all different types of things. I don't understand it. I don't know why people line up for days trying to buy a Hello Kitty doll, but it like it seems to work. There've been all sorts of weird software businesses I've come across. Japan has one of the only pure play channel management software companies. So for anyone who doesn't know what that means, that's a piece of software that connects a property management system run by like a hotel to like Booking.com and Airbnb, etc., other aggregators. It's it's the most bizarre thing I've ever seen. That's a commodity product, has been a commodity product for many years. Um, and these guys run like the dominant, localized channel management business in Japan. It's run with like 99 employees or something hilarious like that. It's got ridiculous operating margins. It has great revenue growth. Like pretty disciplined on costs actually, and they just do absolutely nothing with the money. So this product line, which is being commoditized almost everywhere else and being eaten up by either side of the network, just persists with great dominance in Japan, and for reasons that it's like really hard to figure out. Like I can't understand it, except that maybe there's like an inordinate amount of customer loyalty in Japan, and people are very apt to stick with local products. Um, don't really want to trust like poorly translated outside products. I don't know. If you like take the cash and stuff off their balance sheet, it's running at like some hilariously high um, return return on equity, and it's run by a very old guy who started it many years ago. So yeah, like remarkable. I remember a couple of years ago there was There was a vertical market software business that does software for hair salons. Like a very similar type story. Like a very small niche. Vertical market software has worked in many other places and to dramatic effect with consolidate to roll ups like Constellation. You just have all these weird, you have all these weird businesses, and again, this weird conglomerate thing where even newer emergent businesses are running like 20 different product lines. Sometimes they're completely unrelated. They're really good at one, they're bad at the other 19. Perplexing. And again, the balance sheet piece, like the capital allocation thing is often poor. It's not like a huge, these things are getting better, but not a huge history of, big share purchases, or, special dividending out money that's sitting on the balance sheet, or like any, pursuing high ROIC reinvestment opportunities. None of those seem to be the topic du jour, although that's changing. Um, and the only other thing I've looked at there is like things in the semi cap AI Nvidia supply chain, which have been like a great thematic trade this year. There's been people making a fortune in some of these much smaller names listed in Japan and Taiwan and in Hong Kong, of new businesses coming to market, which have these enormous backlogs driven by the data center and AI compute build out. But like those companies have good reinvestment opportunities, but the question is always what happens when the demand dries up, and how do they allocate capital when things change? And they're very untested in that regard. On the like rational front, the Tokyo Stock Exchange has had like a fresh round of reforms, which are aimed at both having companies improve their return on equity and in closing the discount to book value for them. So, like I mentioned, this weird balance sheet thing where even good capital efficient companies have enormous cash balances. They have cross holdings, they have security portfolios, which are just things that publicly traded companies do not need. Don't need if you are a good company with good prospects, a good market position, and good current economics. Don't need to have like 3/4 of your market cap in cash, and then some like undisclosed in commercial real estate. Uh, those are things which are unnecessary and that like freeze the capital markets because capital is not flowing to where it can most efficiently be used. And so the Tokyo Stock Exchange has been working towards people, first of all, increasing their return on equity, I think, or return on capital, um, which is, you can do both of those things by returning a lot of the cash on your balance sheet, divesting yourself of these assets, right? Like your return on equity and capital is automatically going to go up. And then in terms of closing the discount to book value that a lot of these companies have, they're trading at an enormous discount to, or historically they've traded at quite a large discount because of the, like uh, the bad reputation for capital allocation in the past. So if you have like a bunch of cash and on your balance sheet and you never do anything with it, eventually over time the market is just going to put a discount on that cash because it gets inflated away over time. And not only that, if you've got a profitable business, there's going to be more cash piled up on your balance sheet over time. And if you don't do something with it, then obviously your return on equity will converge with the return on cash, which for many years was negative in Japan. So, at the extreme, if you just never pay a dividend, retain all your earnings, and cash earns a negative return, that's a negative return business at an extreme. Um, and so, closing this discount to book value, they're doing a lot of the same things, which is like getting out of unrelated lines of business, remediating what they're doing with the cash they're generating. selling off non-core real estate and businesses, and on and on and on. And so these things have been quite good at the margins. Um, but to me, it's like, if you're someone who does these long-term earnings power plays, and want to own assets that have high return on equity and allocate the capital appropriately and make smart reinvestment decisions. These are not particularly easy things to come by, and to the extent that you could identify them, like, yeah, you're probably going to have to go over there. You're going to have to meet people, smart, probably smart local investors, um, and you're going to have to like understand the culture. None of which sounds that fun to me. um, but I'm kind of like I'm doubtless that there's opportunities over there. Some of these, the companies that I've looked the deepest at would be some of the cloud accounting names. So some of these will be well known. Things like Free, things like Money Forward. There's other SaaS businesses like Sansan. There is legacy ERP systems and integrators. Quite often they're broken apart. So there's like a great deal of these software companies, which have been very good software companies in the West. And then you look at them, and many of these issues that I've mentioned have kind of um, been true of them. They have a weird management. Management makes weird decisions, like they decide to raise like a bunch of cash when they're basically almost profitable anyway. What they're going to do with it, I don't know. There's like good, good growth opportunities, no doubt. I have no problem believing that. What they're going to do with the money in the future is bizarre, and quite often, even the ones that are deriving the most of their like adjusted EBITDA from their high quality businesses, they run like seven, eight different other business lines, some related, some yeah, like what's going on here? Yeah, so it's a strange market, incredibly strange, but it seems to have bounced back. Um, it's been like very it's been hit pretty hard by the events in the Middle East, and people seem to be kind of like bumming back. So it's something I continue to look at, but you know it doesn't do the things that I would that I would enjoy. Like, I enjoy a business rationalization happening in 8 months instead of 40 years. That would be my kind of thing. Anyways, that's some thoughts on Japan. Hope everyone's had a productive week and enjoy the weekend.